You've probably received mail like this before, offering points, miles, or cash back in exchange for signing up for credit cards. Is it free money? Is it a scam? The answer to that question is really more dependent on you as the cardholder than it is on the companies who offer them, and really dependent on how you use the card. Those pocket-sized pieces of plastic can be a source of contention for a lot of people and a source of stress. Like most tools, credit cards can provide value, but they can also cause problems if you use them incorrectly. Arming yourself with information is really the best way to see if they're right for your financial situation. In the next few minutes, I'll share some pros and cons of credit cards, some ground rules for maintaining a healthy relationship with them, and lastly, a few common myths that I've heard. I'm not a financial advisor, I don't work at a bank, but I do have a lot of experience with credit cards and personal finance tools. So to start off with, a few cons. We're probably fairly familiar with a lot of these of credit cards, but the temptation to spend more money than you have, the high interest rates, usually variable interest rates, sometimes 25% or higher. Rates are higher for cash back and travel credit cards than they are for some of your more basic cards with less points and that kind of thing. Some types of debt are considered good debt, like loans for education or even like mortgages sometimes. But credit card debt is usually considered bad debt because it really doesn't provide any value, especially if you're paying interest on your credit card. In addition to those issues, there's also have been studies that have shown that paying with plastic or with your phone, really, regardless of whether it's a credit card or a debit card, it can encourage spending, especially or compared to cash alternatives. Just the mental process of making a transaction like that. That said, those are some of the cons of credit cards. Some of the pros, there's quite a few positive aspects. On the surface, they earn cash or points or miles oftentimes, rewards for transactions. Cash rewards are oftentimes a lot easier to use after you earn them, but points and miles can provide huge outsized value and pay for some or all of a vacation or something if you put the time into finding the best way to use them in the sweet spots. Some cards will also offer some other benefits like free baggage on flights or free airport lounge access, travel insurance, car rental insurance. Others will have things like price drop protection, where if you purchase something and the price goes down the next day, then you can get a refund for that, or extended warranties. If you buy something and it breaks a year after the manufacturer warranty is up or whatever, sometimes the credit card will cover the cost of that replacement. Others, if you pay for your cell phone bill with a certain kind of credit card, they'll cover phone insurance for you if you drop it or break it and need to replace it or fix it or something. So those are a few things. Another less exciting reason that you might want to use credit cards is most retailers have kind of built in the fees, the transaction fees of taking credit cards into their prices. This means if you're using cash or some other method of payment that doesn't reward you, you're effectively subsidizing the people who are using credit cards because they're earning cash back or whatever on their transactions, but you are not, and the prices have been raised to take into account the cost for the business to accept credit cards. Finally, probably the most important reason that you might want to use credit cards is to benefit your larger financial picture via the credit score. Credit cards have a pretty big impact on your credit score, and they can be used to help build credit or improve your credit score as long as you use them correctly. And that score is used by lenders to determine your eligibility or your interest rate on mortgages and auto loans, those kinds of things. So we'll talk about a few ways to boost your credit score here in a bit. Now let's go over some ground rules. These are ground rules when using credit. And really, for anyone actually, you want to understand your credit score before applying for a credit card, or before really applying for any type of loan. You want to understand your credit score. CreditKarma.com is a service that will watch your credit score and alert you whenever it changes. It'll also help suggest credit cards based on your credit score that you might be eligible for. It's important, another thing is to keep track of how much money that you currently have in your bank accounts. There's several apps that will securely connect to your bank accounts and give you visibility on your finances, your larger financial picture. Things like they'll show you balances in each of your accounts, your checking, your savings, your credit cards, your loans, whatever. It'll categorize all your purchases across all of your accounts and show you how much you're spending in restaurants versus grocery stores, gas, those kinds of things. And they'll also provide budgeting tools along with that, so that you can create a budget and get alerts from them if you're going over your budget, that kind of thing. Some examples of services like that would be Mint.com or PersonalCapital.com. So those are a few ways to keep track of your finances. Once you know how much money you have at any given time, then it should be relatively straightforward. You just don't spend more than that, more than the money you have. And the best way to use a credit card is really to think of it like writing a check. Make sure that you have enough money to cover the check when it comes due. Another important thing along with that is to never miss a payment. Missing a payment will definitely hurt your credit score. I always recommend that people set up autopay right away when they get a credit card, and that they set it to cover the full balance each month, which is different than the minimum payment that is due each month. But if you cover the full balance each month, as long as you pay that, then you will never pay interest on the credit card, and you'll only be paying the money that you spent on the card. Another tip is to try to keep your balances low and try not to use more than 30% of the credit that has been extended to you on the card. If you do that, that will help keep your credit score in check. If you consistently spend more than 30%, that can cause problems with your credit score and have a negative impact. But the bottom line is, remember, the rewards that you get from a credit card will never outpay the interest that's charged on the card. So do everything you can to not pay interest on the card. So we can move on to a few myths that I've heard. One of the myths would be that having a credit card or too many credit cards will hurt your credit score. And that's not really the case. In fact, having more credit accounts can actually boost your credit score because it's showing to potential lenders and stuff that people like to lend you money, and that they trust you. So you can really have as many credit cards as you want, as long as you're able to stay organized and not miss any payments. Another myth that I've heard before is that closing a credit card will help your credit score. And that's not really the case. If you've struggled with credit card debt and you finally paid off a card, you might be tempted to close the account and say, sayonara, I'm done with you. But you might not want to do that because that will eventually remove the card's positive effects that it has added to your credit score over time. Things like the payment history that you have from the length of the card, the average, the age of the account, the longevity of the account is an important factor in your credit score, and credit utilization. You would essentially be saying that, like removing that amount of credit they have extended to you from your credit score, and that doesn't look quite as good as it could. So another, or you might want to, instead of closing an account, you might want to just keep the account open and not use it very often. Maybe buy a pack of gum every 6 months or something like that, just to have some activity on the account, but to continue to have that credit extended to you, just don't use it. The last myth that I've heard is that you always want to avoid annual fees, credit cards with annual fees. And sometimes it's actually worth it, depending on your life situation, to have an annual fee on a credit card. You just want to make sure that you're getting positive expected value from the card. You can do this by adding up the value of all the benefits that you would get from it in a year, and then subtract the annual fee that you'd be paying for it. And if that's a positive number, then it might be worth paying for the annual fee of the card. If that's a negative number, you might want to look into contacting the credit card company and asking. Oftentimes there's an option to downgrade to a no annual fee version of the card. So it's worth giving them a call and asking about that. So to wrap up here, there's a lot you can deep dive into with the strategy of optimizing credit card points, redeeming miles, and all that kind of stuff. But for the sake of this talk, credit cards are not 100% good. They're not 100% bad. They definitely add some complexity to your personal finance routine, but they also can offer lots of reward and value, and they can help your larger financial picture via the credit score impacts. So just to recap a few of the resources that I mentioned, some personal finance tools would be mint.com or personalcapital.com. And if you want to track your credit score and find ways to make that better, you can check out creditkarma.com.